You're listening to Confessions of a Bookkeeper, where we look at businesses through the eyes of their books. My name is Mark, your Chief Bookkeeping Officer, and I spent years cleaning up and reviewing some, let's say, interesting books. In today's episode, we're talking about one of the most anxiety-inducing topics in personal injury law practices, bookkeeping and trust accounting. We all know that law firm accounting is in its own world, but inside that world, personal injury sits in a category all by itself. The case volume is high, the IOLTA activity is constant, and the level of scrutiny from regulatory bodies has never been higher, especially after the Girardi fallout here in California. And because of that, PI attorneys ask very important questions when they're evaluating a bookkeeping partner. We work with PI firms for years. We understand settlement flow, and we understand exactly how costs and trust transactions need to be recorded. So today, we're walking through questions we hear from PI attorneys, and I'll give you both sides of the conversation. First, how you, the attorney, think about the question, and then how we answer it as your bookkeeping team. So let's get to it. So the first question revolves around our experience with IOLTA trust accounting. A lawyer would typically say something like, do you have experience with IOLTA trust accounting under the State Bar of California's rules? I need you to understand how the client ledger, the trust register, and the bank statement all tie out. If you can't explain that clearly, we can't go forward. And me as your bookkeeper would say, yes, we perform through trust reconciliations every month. Client ledger is usually from your case management software, trust liability accounts from your bookkeeping, and of course the IOLTA bank statements. All three must match to the penny, or we stop and resolve the discrepancy immediately, or just let you know about it. Our process aligns directly with the State Bar requirements, and we utilize the California Bar's recommended Excel-based formatting standardly. The second question revolves around us understanding settlement flow. A lawyer might ask me, how familiar are you with contingent settlements and how they move through the trust? I'm not asking you to manage those fees or manage those payments. I just need you to understand how settlement money flows and how to record it correctly. So me as your bookkeeper, we would say we know the settlement flow end to end. Deposits into trust, fees and reimbursable costs out, lien payments, client distributions, and the fee transfer to the operating account for your legal service income. We don't decide on those amounts for you, but we do document every movement accurately. A third common question is case costs and the profit and loss reporting. A lawyer would say to me, my CPA says case costs shouldn't hit my P&L. Do you understand what he means by that? Me as a bookkeeper would say, yeah. Most PI costs are advanced client costs and belong on your balance sheet. They stay there until the settlement reimburses them. They do not hit the P&L unless your CPA has, some type of specific exception, which is usually maybe a case has been lost. By the nature of this correct accounting methodology, it also means settlements never see your P&L as well. And I know that sounds like common sense, but you'd be surprised what we've encountered in the past. The fourth question would be, how do you record settlements and disbursements? A lawyer would ask, when settlement checks come in and disbursements go out, what do you need from me to get everything recorded? These things move fast, and disbursement letters sometimes arrive before a deposit clears in the account. Us as the bookkeeper, we would say, all we need is the deposit information, which we can actually usually see happen live in the bank account, in the disbursement letter itself. Wherever you store them, that could be like in a cloud software or even inside the case management system. We match the settlement breakdown, fee, costs, liens, client payout to the trust activity and record it accurately. That usually involves reducing your advanced cost account on your balance sheet, increasing your legal fee income on your profit and loss, and zeroing out the client's liability account also on the balance sheet. Up at number 5 is working with the practice management software. Can you work with whatever system I use to store my disbursement sheets and cost information? Some firms track costs in the software, but some don't. We as the bookkeeper, we would say we would be happy to adapt your workflow, whether disbursement letters are stored in your practice management software, a shared online file drive, or even just emailing us directly. We retrieve what we need, or you can send that information to us. Also, we have great familiarity with a lot of different types of practice management software. Specifically for PI firms, they usually use FileVine. If you track costs inside FileVine or the equivalent, we can use it as a cross-reference. That's not a problem. At number 6, monthly reconciliation of all financial accounts. The lawyer would ask me, do you all reconcile all of our bank accounts and credit cards monthly, even if some statements close mid-month? I would say, yes. Trust is always reconciled monthly without exception. Operating credit cards, they're reconciled on the actual statement cycle, even if it falls mid-month. This is standard practice regardless of what industry we're serving. For 7, it's being ready for tax season and 1099s. A lawyer would ask me, how do you keep my books ready for tax season and 1099 reporting requirements? Sometimes you can't fully close a month out if you're waiting on me for clarification. Us as the bookkeeper, we would say, we close the books monthly and flag any items waiting for your clarification, and once we get that answer, we can finalize within a day's time. For 1099s, we usually know the cadence contractors get paid, so once the final year's payments are identified, we begin drafting the first version of your 1099 recipient's tax forms. This ensures we have plenty of time to finalize in the first half of January of the following year. Also, to aid in this process, most of the potential 1099 recipients will have their own P&L account under our contractor parent account for greater visibility to Form 1099 creation. For number 8, it's about clean cost data for client requests. A lawyer would say to me, how do you keep my cost data clean in case a client asks for a full breakdown? Me as a bookkeeper, we would say, we maintain detailed client cost ledgers within your bookkeeping. Every subpoena, record request, mailing fee, filing fee, and expert cost is tracked cleanly and tied to the trust record so you can produce a full breakdown at any time. This means even if you don't keep this information in your practice management software, we're recording it for you. Just know we do need a tight collaboration throughout the year with yourself or your case managers to accurately identify costs should they appear on financial accounts that are also paying for operational expenses. For number 9, it's about additional reporting. A lawyer would say, what reports do you provide beyond the basics? I'm not expecting CFO level analysis. I just need to know what else do I get. So I would say in response, we provide monthly P&Ls, balance sheet, and trust reconciliation reports. Within the reporting though, there's a lot of helpful information there, such as costs and loans to your clients, monies held as a fiduciary, and should your accounting methodology support it, income and expense by class or location, which is helpful for tracking partner performance. And number 10 is about communication and response times. A lawyer would typically say, what is your communication and response time policy? PI moves fast and settlements move faster. We as bookkeepers, we would respond, standard questions are answered the same or next business day. If something requires deeper research, we acknowledge your email immediately and give you a realistic timeline on an answer. Those longer turn times are typically tax or payroll related. Just know you can always reach out to us by phone for really pressing questions as well. At number 11, it's about access and confidentiality. A lawyer would say to me, what access do you need and how do you protect confidentiality? You don't need my case documents, right? You just need financial access. Us as a bookkeeper would say, correct. We only need access to your banking portals, credit card statements, practice management software, if cost data is in there, and your payroll account. We do not access case files. All financial access is securely managed internally, and we guide you on creating very limited user permission sets for our financial account access. All of this helps keep your bookkeeping hands-off as much as possible. We will only come to you with questions about unclear transactions or missing documents like disbursement letters that's needed for trust reconciliation. At number 12 is experience with other PI firms. Lawyers would ask me, do you work with other PI firms and how do you handle confidentiality? I don't need names, I just need assurance. I would say we work with many PI firms, but we never disclose identities. Trust accounting is much too sensitive for that. We demonstrate competence without naming clients. For number 13, it's all about error prevention and internal controls. A lawyer would ask, what internal controls do you use to prevent errors, especially in trust accounting? Me as a bookkeeper would respond, every trust reconciliation has a second reviewer. Client ledgers, trust accounts, and bank statements are cross-checked. Any inconsistency is resolved before closing. That is the wonderful thing about our business. We have a great team of chief bookkeeping officers with some having many years of experience in IOLTA reconciliations, which I know is rather rare in our industry. At 14, it's about scaling with their firm. A lawyer would say, if I add attorneys or if my firm is growing, how does it affect our bookkeeping? I would reply, adding attorneys doesn't change the structure by itself, but if you want class-based reporting for partners, that expands workload because every transaction must be categorized twice. We can scale with you and we'll discuss scope changes there transparently. Sometimes adding a partner will eventually change the number of transactions a firm sees across its accounts. That also can be an adjustment of scope, but we honor the contracts we are engaged in. And finally, at 15, it's about handling cleanup and catch-up bookkeeping. The lawyer would say to me, how do you guys handle cleanup when onboarding? Me as a bookkeeper would respond, yes, every engagement likely is going to start with cleanup. We can tie out the trust from day one, reconcile historical operating activity, and verify your cost ledgers. Sure, you can't build anything on messy books, so that's kind of why we need to start with a clean slate. Just as a heads up, as this comes up quite often, the time period we need to clean up is determined by the last date of accurate trust information inside the book. Should the trust have never been reconciled, for instance, then our period of cleanup must be from the business's inception date to current day. So those are the 15 questions we hear most from personal injury attorneys and the answers we give as bookkeepers who specialize in PI firms, trust accounting, and high volume settlements. If you're a PI attorney evaluating a bookkeeping partner, or if you're trying to understand what good bookkeeping actually looks like in a contingency-based practice, hopefully this episode gives you some clarity. And if you want help with your books, cleanup, catch up, ongoing trust accounting, or monthly financials, reach out to us at chiefbookkeepingofficer.com. Your books deserve accuracy, your trust deserves compliance, and you deserve support that understands how your practice actually works.